Time to see what's on the radar for Nate Thooft, Chief Investment Officer and Senior Portfolio Manager at Manulife Investment Management. And Nate, there is gold in them thar hills. It's up over 4,300, I think, right around the record highs. It's still going, 5,300. That's how much it's been going up. 5,300 record highs right now. And again, another surge today. What's going on? And is there any indications to you that this might slow down? And where are you looking?
Is a fascinating move in gold and some of the other precious metals overall. I mean, I've been in the industry 25 plus years at this stage, and a chart like this doesn't come across the table very often. And the reality is this is also probably something that we've reset our expectations from a price target perspective more than we've seen anything else over the last decade. And so we keep raising our price targets. When we think about gold, it's a very difficult asset class to value because there's a lot of underlying drivers of. So we tend to use a very simple approach of what are the reds and the greens when it comes to the driving forces behind gold. And there's a lot more greens right now than there are reds. And they include things like geopolitical uncertainty. They include concerns around fiat currency, excessive debt levels, things around debasement, and it comes to overall fiscal spending dynamics globally, dollar depreciation. There's a whole host of things that are flashing green for us that continue to provide support for not only gold, but other precious metals as well.
And what are some of the red lights? Are there any right now? And are you looking for them on the horizon?
The biggest red light is the move that we've seen has been very dramatic. And it's hard to say whether it's overvalued or undervalued. As I said earlier, it's very difficult to put a value on gold or silver. But the reality is the price has moved a long ways. And so we should expect more volatility this year, I think, in the price of gold. And that doesn't necessarily mean the price of gold has to go down, but you're going to see more episodes where you have moves that are 5% up or 5% down in a given day. But as long as those underlying pillars still say green in our view, that is a positive backdrop for gold to continue to push higher. Our current forecast is for it to hit at least 5,500 this year. And there's a very reasonable chance that we'll have to increase those price targets like we did last year. So we are still favorable on both gold and silver as an allocation in portfolios, with an understanding you want to be careful about the volatility and how much you own.
I mean, 5,500 could be Friday.
I know, with these type of moves, that's absolutely the case.
Have you ever seen a curve or has there ever been a curve either like this or close to this? And what happened to that curve?
That's the big red question, right? Because when we've seen the levels of gold versus other assets, whether it's looking at stock prices or other real assets, we are trading at extremes. And typically when that happens, you do see a price correction. And so that is the thing that people are watching is like, what will cause this price action to crack? And so the technicals and sentiment matter a lot when you're looking at currencies, and in particular gold, which does trade on sentimental drivers quite significantly versus other assets. And so there's a lot of folks watching that. But again, if you go back to those pillars that are supporting the price of gold, it's hard to see how they're going to change. We're not going to solve the fiscal spending problems of the world. We're not going to solve the fact that we're printing lots of money anytime soon. So as long as those underlying drivers stay in place, there's quite a bit of support for gold despite the lofty levels that it's trading at.
And then what? And what about silver too? And in some ways, as much as people are loving it, watching this number go up, it's hard to get in and figure out what to buy, isn't it? For both gold and silver, because silver's just gone insane.
Yeah, I think silver is basically gold on steroids, and there's a couple reasons for that. Silver tends to be a more volatile asset class. Two, there are some more industrial uses of silver in addition to the precious metal aspect of it. And then three, there does historically tend to be more hedge fund and other types of players that traffic in some of these precious metals that are less liquid or not as widely traded. And so you do see some of that type of behavior happening both in silver and gold, which is partially driving some of this move. And so that does create some level of questions about when would those players potentially exit, which could cause some type of drawdown in the price of the metal. And so we're a little bit more skeptical about silver because one, it's moved further, but two, there's other drivers that are particularly related to industrial uses and supply and demand. But as of right now, the demand for silver remains very high because it does feed into the AI theme theme as well. So there's a lot of things to like about them, other than the fact that the move has just been so dramatic over the last year.